following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to Option Block live here from the Futures Industry Expo in scenic Chicago from the Hilton here on South Michigan Avenue, and it's a fun time to be doing a live show. Guys, I don't know if you know this, but we're that close. We're a couple off from our 100th episode. So we can kind of
that is unbelievable.
We can consider this our pre-100th episode spectacular. Our 97 episodes doesn't have the same ring to it, though.
So at 100, can you sell it to the networks?
There we go. We'll sell it into syndication.
Yeah, make some real money.
My name is Mark Longo from theoptionsinsider.com, as well as the bulk of the shows here on the Options Insider Radio Network, and I am joined today by a rogues gallery of characters, starting off to my left with the man about the options business, good old Alex Jacobson, currently of Options Express. The man has been around quite a bit, though. Alex, welcome back to the program.
Thanks, Mark. It's good to be here at FIA. It's really interesting to see the size of the conference this year, the amount of people here, the crowds, the number of vendors. It just reinforces how robust and exciting a business this is. It's great to see all the international stuff that's here today. There's always a big contingent from Europe and the Asian marketplaces here.
You can tour the world just walking through the vendor hall here at FIA.
Yeah, no, this is always a great show.
Of course, it's a little dicey to be doing it now because this is the Taste of Expo reception, and everyone has a drink in their hand, so the crowd may get a little rowdy towards the end of the show.
That's the 4 o'clock risk. It's similar to pin risk on the trading floor.
Yes, there you go. And seated next to Alex is the good old Seabass, a.k.a. the Greasy Meatball, a.k.a. Mark Sebastian from OptionPit.com. Mr. Sebastian, welcome to the live show, sir.
This is great. Mark, I can't believe they managed to pull you away from the dining hall long enough to do the podcast.
There's so much good selection there.
I may be the Greasy Meatball, but you're the mouthful of meatballs.
I'm not not today anyway. We're a little bit busy. And then next to Mr. Seabass is good old, a first-timer on the show, so we'll try to go easy on him.
Although I have to, I've known Jim for my entire time in Chicago. He and I were at Group 1 for a long time together.
So we won't hold that against him, listeners.
No. So he knows this side very well.
It is Jimmy Ruzan holding down the other side of the Options Express hot seat here on the panel today. Jimmy, actually, welcome back to the show. Didn't you do once previously you were on the program, correct?
Yeah, for about a 5-minute injection of information.
You jumped in for a quick hop-in. Why don't you give our listeners a real quick overview of what you do over at OX?
At Options Express, I'm the Director of Education. I primarily do our live workshops. Last week I was in San Diego. We'll be in Portland soon. I'll list them a bunch off at the end, but I work with our customers. It could be 100, 200. Go through the presentation of platform immersion, trading strategies. I also do our internal training also for our employees. The best part is I get to work with our customers and share my option background. So for me,
I say the best part was working with Alex. You had a golden opportunity.
You know what? Yes, that was the other part I forgot to mention.
And Mark, just to warn you, if I call Jim barbecue, it's not because I'm making a food joke. It's just that was his badge on the floor for like 20 years.
Really? You were BBQ?
He was BBQ. And so if I look over and I say barbecue, I'm actually just calling him by his acronym.
I'm used to it.
And then last but not least, holding down the end of the panel there is good old man from the mountains, Uncle Mike Tusaw from Know Your Options, Inc. How are you doing there, Uncle Mike?
I'm doing well. I've been coming to this FIA show for I don't know how many years, and it's exciting to be back here. This is American capitalism at its finest, worldwide American capitalism, I guess, since there's other countries here. But it's always exciting to be here. I know, and just on this panel, just between all of us, we've all known each other for years. We've been at different areas in the business, but we've all worked together in a lot of different capacities. This is always a fun time to be here.
Speaking of capitalism, I haven't been outside the hotel in a few hours. Have the protesters started to gather across the street yet, or are we still safe down here?
Well, there's a plethora of signs that make zero sense up there.
They're at the Board of Trade.
It's hilarious.
That's
yeah,
about what you expect, I would think. All right, and with the intros to the panel complete and the team assembled, we will roll right into the trading block.
The trading block.
All right, and welcome to the trading block, and it was another exciting day lighting up the tape today. It was essentially, looked like in the morning we were going to have a bit of a sell-off due to these concerns over the Eurozone and the Eurozone rescue plans kind of coming to an impasse. That seemed to go by the wayside by midday, and we were rallying a bit. Some of the indices were up almost 1% around midday, and then we closed almost unched on the day. The S&P was literally unched. It didn't even move a point today. Closed at 1195. The Dow down about 17 handles to 11,416. Good old NASDAQ up 17 to 2583. And the VIX cash closed at 32.76. So essentially there was a whole lot of nothing lighting up the old tape today. Mr. Seabass, was that your takeaway as well?
Well, yeah. One of the things I've been watching is kind of the relationship of the S&Ps to the VIX. I know it's relative. A lot of people forget that. And
it's not one-to-one?
I never knew you traded the VIX.
Yeah, no, shocker.
Really?
But
Wow.
one of the things I'm noticing is we're at, if you looked at the VIX since this kind of European disaster really blew up, it's actually been in the volatility equivalent of a trading range where it's been kind of hovering around 38, 39. We're down to about 32.5 right now. This is actually where we're going to do one of two things. This is kind of I like to call it 2 a.m. at the bar. You don't have to go home, but you can't stay here.
Another one of your colorful analogies here.
So, I mean, we're going to be moving. This is actually, I'm looking at VIX, and this is a perfect straddle setup in either October or November. Both option volatility in both OCC and NOV are pretty normal. I mean, normal levels for VIX, not normal levels for kind of where we're things blowing up around 85%. And from a place of 32, we're either going to run right back up to 40 on a sell-off down to 11 and a quarter, 1100, or we're going to get away from 32.5. If we break that 30 barrier at some point, it's going to be a quick and ugly dive down below 25. One thing that makes me think we might be heading that direction, and maybe it's related to an off-floor thing, but there was some customer in there that bought about 140,000 of the November 25 puts, paying up to 50 cents for them, kind of midday. Really ran up downside on November, and so I don't know. It's interesting, but when I saw the prices of straddles, about $4 for the October, about $9 for the November, they both look like a really decent purchase right here, and that's kind of the way I've been playing things.
So 32 not sustainable, says
no. That's actually the only number where I feel pretty comfortable buying a straddle.
32, no.
No, exactly.
And Uncle Mike, do you concur with that here? What was your take on today's action or lack thereof?
Well, I mean, it was obviously an exciting day, but yet a boring day. If you're trading condors, it's a very exciting day. But when you have something like the VIX at a level like 32, I agree with Mark. This is something to where I I don't know if I quite agree with his analogy on going home and staying here, but
That's a great line. You don't have to go home, but you can't stay here.
well,
And you've toned it down for our audience. So thank you very much. That was
Exactly.
child friendly.
I'm the straight man, I guess. So it's like we always said when this show starts. Like I'm Pat Summerall and he's John Madden. He's the one that gets it going like that.
There you go.
But no, I think that we're at a point where you're right. We can go either way on it. The market's rallied quite a bit in the last couple of days. The U.S. stock market's rallied quite a bit recently. And then, is this rally sustainable? Who knows? But if it does continue to go up, then yeah, it's tough to see the VIX holding the 32 level. I agree with you.
Yeah, I mean, we've seen an 11, 12% rally in 8 days. And if you had said 2 weeks ago we'd get that kind of rally, I would have ventured to say the VIX would have cracked 30 by now and been under. I mean, again, this 24-hour news cycle is kind of interesting. You know, for the last month when you came in and we were down in the morning, it was bad news out of Europe, and then you had that last hour reaction rally, you know, either attributable to a genuine rally or the ETFs. But today was an ironic day because we had that big up day yesterday. You kind of went home yesterday and said, "Oh, we're going to open lower tomorrow." It's the way it's been lately. We're going to give some of this back, and today was, you know, what we used to call dramatically unchanged. It was just an absolutely quiet day, which after about, say, 11 to 12% in no time, I was kind of very pleased to see the action today. And
Speaking of sell-offs, I think your put buyer may be unhappy out there in VIX today because Alcoa just came out after the bell and they're already selling off about 50 cents. They closed at 10:30 and they're down about 9.80 in the after hours. And Alcoa always sets a tone for the earnings session to come.
Start of the earnings season. Yeah,
starting it off with a bang. Alcoa.
You'll never guess who short calls in Alcoa.
I'm going to
He's
guess.
about 5'4", really good looking.
Oh, him. Your brother, then.
Well, what were the earnings? Were they how
I don't
far?
have the numbers here. I just have the net reaction, what's going on in the after hours right now. It looks like bids are scarce in Alcoa right now.
You know, this is one of those things. Open mouth, put foot in it. But down 50
By all
cents.
means, this is what we do here, Alex.
Yeah, they may actually be decent earnings.
Yeah.
Down.
You know, Alex, it's here for us. It's like we open our mouth to change feet.
I see.
It's not that we're inserting foot; it's just we're swapping feet out.
Cool.
That's the Sebastian plan. And Uncle Mike, what was for the listeners? What was the BBI today?
Oh, BBI was very calm.
I think
Didn't
it
have
was
to
a
do
relatively
whole lot.
quiet day today.
Yeah, very quiet day today in that regard. Didn't have to do too much adjusting, but I had to. Well, I guess we'll be talking about Apple in a little bit. Had to roll up a call on Apple today, but for the most part, it was a pretty
hard
calm
life
day.
you lead, sir. Before we dive off the VIX and everything, I was like, Jimmy, anything you want to dive in here on with
with Europe here, it looks like it's going to be good news for a while, right? So, you know, as you guys were talking about the VIX going up to, I would have to tend to say it's going to lean down a little more, but long term, I mean, guys, it could go to 40 easily in a heartbeat. It's just a matter of time. Short term, I think it's coming down. Long term, yeah, there's bad news on the horizon still. So
Yeah. Well, that's the consensus on the table. That I think we all think that VIX will probably be 7 or 8 points from where it is now. And if this rally sustains, and to your point, Jimmy, if the news out of Europe remains benign to good, it would not surprise me to see those 25 puts trade in the money.
Yeah. Alex, I got a question for you regarding VIX. One of the things that Mark and I have been talking about on the show, and Mike, was that on the sell-off that we saw VIX option volatility get kind of plastered as the VIX was rallying, which is really counterintuitive. Any thoughts on how something like that happens?
I mean, I always bring this different perspective of volatility that most people bring. I perceive volatility as the cost of hedging. Okay, a lot of people perceive it as simply variance, but variance is a component in it. It's the question you get asked all the time. In U.S. equities, stocks go up, vol goes down. In commodities, ironically, they go up, vol goes up. They go down, vol goes up. volatility is the cost of hedging. When I don't want to make this overly academic, and I know I get on this soapbox periodically, but if you go back and look at the work that was done by Fisher Black and Myron Scholes, a lot of what they talked about is implied volatility is really the cost of reaching out into the marketplace and getting that hedge accomplished. Now, I know that's kind of an oversimplification, but one of the things, VIX, which is still a pit-traded product, is still not that easy to get your arms around. And as good as liquidity is in the SPX and as great as liquidity is in the Spider, VIX still is a pit-traded product where half the volume is still done in person, and that implies that there are some inefficiencies in it, and it's still a very challenging product to trade. So I think that's part of the reason you don't get that intuitive inverse relationship all the time. It's hard to hedge.
Well, you spend your days these days, too, working with the education team over at OX and dealing with the customers on a daily basis in terms of education. What percentage of your time would you say your in-person time with the customers is spent dealing with VIX and or vol-related questions?
Given my background, I like to talk about vol a lot. And in fact, when I came to OX, one of the first things I did is I did an internal pricing and vol class. And as I say, I bring this kind of outlier perspective that vol is not just pure variance, but this cost of hedging. And one of the things you find with sophisticated customers, in the amount of time I've been teaching options, the core thread has always been, in terms of what you teach, it's not how to get rich, it's how not to get poor. And the real distinction between what I'll call a well-educated trader and kind of a less well-educated trader is a less well-educated trader, when they put a trade on, is looking at trend and time. Is it going up? Is it going down? Is it staying the same? A well-educated trader is looking at trend, time, and volatility. And in my world, when I trained institutions, when I talk to the more sophisticated customers, that's really the distinguishing point. I mean, you've all had the experience. You've all heard the option complaint. I bought a call. The stock went up. The call went down. Those damn market makers, those so-and-sos. And
I'm going to forward you all my emails on that from the site from now on.
And you've got to educate that customer that, although I hate to say this, they bought the wrong option. And the real distinguishing factor, the real issue in options education, when you go out, talk to sophisticated customers, talk to hedge funds, is this thread that I always tell a customer, you need to develop an intuitive view of vol. And it's what I call the Goldilocks look. Too hot, too cold, or just right. And the thing about, if you have a perception about vol, you're not always going to be right. Right? You're not always going to be right. But if you have a perception about volatility, the first thing you teach a customer is what is high volatility and what is low volatility. In my world, high volatility is when you think it will be lower going forward. And if I think it will be lower going forward, then I will enter into trades that benefit from a decline in volatility, and then I'll overlay my view of trend and time. If I think volatility is low, to me that means it's going to be higher going forward, and I want to position trades that will benefit from an increase in volatility. I just designed a webinar that hasn't come through compliance yet, where we talk about this at Options Express. And one of the key things, most customers who look at vol are great at calculating vega. It's great. They'll quote numbers back to you. I'm long these leaps. They've got this vega. I like to think of things in a percentage basis. So if the vol pops 10 points, how's that going to impact the at the money? How's that going to impact the out of the money? How's that going to impact the deep? And I think that is one of the key components that distinguishes the kind of naive options user with the experienced options user. Yes. Yeah, and that part of options trading, I mean, if you think about an option and you say, I want to reduce it to its lowest common denominator, options have value because of volatility and carry. I mean, that's it. And in this environment, there's no carry, right? Interest rates are nothing. Now, if there's a dividend, there's a carry component. But if you're trading short-term options, if you're trading weeklies, the incredible appetite that customers have expressed for weeklies, if you're trading weeklies, you're trading a product that is pure volatility. And the hardest week to get your arms around volatility is expiration week.
And it's
right?
every week now.
Yeah, it's every week now.
Well,
But go ahead.
Here's actually you bring up a good point, and Jim, as kind of the most recent guy trading on the floor, what kind of Vega when you were a market maker? What kind of Vegas were you looking at? How often did you actually look at your raw Vega, or were you really kind of looking at the position? How did you analyze a real position?
Well, as a market maker, we trade position, and we knew the vol level. We trade the vol level, but as Alex said earlier, it's how do you define vol? When I do the live workshops, Mike used to do the live workshops. The majority of our customers, well, let's say half, don't understand volatility. And that's why it's a problem for the VIX. A lot of customers go in blindly, assuming they understand how vol works. So that's the first part. As a market maker with vol, we lived and breathed volatility. We love trading volatility. For me, the way I define it is supply and demand. It's as simple as that. Supply raises it, supply lowers the price. And you look at a simple chart, you're looking for support and resistance, you know what level it's going to be at, and you hope it's going to oscillate within those two levels. So I love
kind of
volatility.
the built-in, I think, training of all market makers is you're cued off levels. Yeah. That's kind of how you're trained to view everything. It's a little bit different perspective than a typical retail customer.
Exactly, it's supply and demand. I have a shotgun approach where a trader, or not a trader, a customer who trades, it's more of a rifle shot. It's a pinpoint shot. Mine, I'm trading all the strikes, all the puts, all the calls, all the months, and I have to make it all work out. Yeah. So Vega is very important to me.
Well, of course, if there's one other topic that captures the fascination of everyone aside from VIX and volatility, it is, of course, Apple. It is the other component. If you can put VIX and Apple in every single article on the site, we would have a tremendous click-through rate.
Yeah, you're right about Apple. Little tip to the panelists. If you haven't written a negative article about Apple yet, don't do it unless you're willing to accept insults about your mother.
Then put your home address in that article, and then look forward to people coming to visit you. But
well, one of the neat things about the option market lately, especially in the last year, has been not only Apple, but all the appetite from individual investors on the triple-digit stocks, right? So this week it was Apple and Netflix and Amazon. But the cool thing about the options market is in this run-up we've had back off the sort of 6,000 low on the Dow, you've got a lot of what we used to call in the industry these unsplit issues, these triple-digit issues. And they're just the perfect place. Who wants to take $400 risk in Apple? Who wants to take what turned out to be $200 risk in Netflix?
The Widowmaker.
Yeah. So what a great place for the options market. And, how cool is it, expiration week? Google always announces expiration week. How frightening it has to be a market maker, on a day like that. When you come in the morning and you've got options, 6 strikes out of the money that are 0 delta, 0 Vega, worthless.
And they're 100 by the end of the day.
Yeah, and
you literally have no idea.
They could be 100 by the end of the day. What a great place from the investor standpoint. What a horrible place from the market maker standpoint. Now, again, no sympathy for market makers in general.
No, and I actually stop me if I'm wrong, guys, but I used to get really angry. No. I'm always wrong. I used to get really angry when stocks split because it just killed your edge. I liked these big dollar stocks because they had the wider spreads. Yeah, it was a little choppier. Yeah, there was the trading was a little more unique, but I really got annoyed when a good equity or a good stock decided to split because I knew that was cutting into my margins.
I think as long as you were net long units at the end of the day, you could weather the storm. I mean, if you went into Netflix and you're a market maker and you were short units, particularly to the downside, then you probably deserved some of what came your way over the past month or two.
Yeah, as a market maker, you never take a position. You never take a position what direction the stock's going to go in. So, but with stock splits, the reason why I liked it, A, more customers got involved, and B, we have more activity. It's easier to hedge things. So I like stock splits. I like volatility. I like people trading options.
There we go. A good sentiment for everyone, I think, to share on this panel. I know we do have a dyed-in-the-wool Apple bull here on the show. We've teased him quite a bit, but it's been working out pretty well in your favor, Uncle Mike, so far. You said you were busy today, rolling calls to the upside. It must be a hard life you live over there in the Apple bull camp these days. Stock's up 15% over the past week, pretty much. Back up over the 400 handle. Got as low as around 350 last week in the midweek. And even though all this talk about slamming the new phone is not really being too exciting, and of course the passing of Steve Jobs, they still had over 1 million pre-orders in 24 hours for that phone.
Remarkable.
It's
remarkable.
I assume you're still maintaining the heavy bullish sentiment there, Uncle Mike.
Not heavy. I'm kind of viewing Apple right now kind of like oil on its way up to 147 at probably like the 120 or 130 level. I would say. I don't know if I think Apple's going to go to $700 or $800 or anything like that, but I do think there can be some more upside in Apple just because of the fact that I think Steve Jobs, it's like we were talking about on the last show, it's been known for a while, at least in the inner circle, I'm willing to bet that he's not going to be around for much longer.
Yeah.
So I think this is something with which they've been prepared for, and I'm willing to bet that Steve laid some plans out for his company for the next couple of years because he obviously had a deep care for Apple just by his actions, by the fact that the man's on his deathbed and would still went out to show the Apple Cloud or whatever that was a couple months ago.
Yeah, you're right.
So I think that there's still a lot of, I think that Steve Jobs can still run up Apple from the grave. Now, is it going to, like the way with which it was going up in the past? Probably not at that level, but I do still see some upside in Apple.
I assume you're tightening up those puts though beyond the 150 strike where you like.
We're at 220 right now, so we're getting a little bit more cautious.
Deep protection.
Yeah. I had a client ask me to construct a position where Apple makes $600 by July of 2012. So there are still people that believe in the dream that is Apple. Yeah, I mean seriously, he made an interesting argument about PE multiples and all sorts of things that if Apple turns into a more does start spending cash or does reverse not a reverse split. Can you imagine a reverse split in Apple?
Reverse split.
It's $4,000 for Apple now.
Berkshire Apple.
Taking the Berkshire model. Yeah.
Well, play it out for a minute, okay? We've moved 10-12% in the last 8 days.
Yeah.
We're 14% off the highs. The old highs were like 12.5 on the Dow.
424.
Yeah. So what if we get back to the old highs? That's another, just from a pure beta play, that's 470
in that range.
in Apple. And tech has been hot lately. I mean, the two big plays lately have been Apple and Amazon. And Amazon is essentially the carp on the pad, and they may make a successful run at the pad. So far, all the producers who've come out with pads, Motorola, Samsung, those people, they've kind of been non-events.
Amazon has that one special sauce, though. They have the content ecosystem that you can actually do something with the tablet once you buy it, which makes them an actual threat.
And actually, what you bring up, this has been why Mark and I have both kind of lamented and shockingly how little interest there's been in the NASDAQ OMX alpha indexes.
Yeah.
Those are actually a really neat product.
We should go grab one of the NASDAQ guys and bring them up here. I'm sure they would love it.
Now, my thought is that the institutions really like being able to buy stocks and sell futures at the same time. But that AV SPY, the Apple versus SPY, those alpha indexes are a really cool product. And yet, it seems nobody seems to want to trade them.
But look, give it some legs.
If I can understand it, it's not too sophisticated.
That's still, we could all sit here and talk about exchange success and exchange disappointments in products. Look at the SPXpm. I would have bet immediate traction from day one, and it's been a little slow.
A little bit.
It's been a little slow.
By the way, AVSPY did a one lot in the front month today.
Oh,
so, they're lighting up the tape today. One lot.
But that's a product that needs some education. But I think it's a product that, in the right environment, right education, people will begin to embrace that.
Well, isn't this the perfect environment where you don't know what SPY is going to be doing, but you love Apple?
It's clearly a good environment, but it's new and it takes time.
You hit on the SPXpm. You guys, obviously, it's new, just came out. Numbers are still kind of fluid, but you guys have been talking to the customers for a while. What sort of interest or is any curiosity peaked at all on the side of retail
appetite
for this SPXpm?
Going into it, appetite, traction, interest, blogs, boards. people were hot for it. It's like we've waited, a lifetime.
Yeah. This was the savior.
Yeah, this was water up the hill at the end of the desert, and I'll tell you, I'm personally disappointed. I would have thought we would have seen a lot more volume there. I think that just tells you things take time.
I know one of the stated goals of this, obviously, well, not stated maybe, but implied goals, is to lure some of that retail volume that has migrated into the SPY options back into the S. And I know I talked to Tim on the last show, and he was saying the same thing, that he wasn't seeing much on the trading desk yet in terms of retail really lighting up the tape and saying, we want to know more about this SPXpm. We want to really start trading it.
Having lived in the exchange community, it's very hard to create a product. It's also very hard to take business away once it exists. And I think you're seeing a little of both of those. But when you talk about an SPXpm product, when you talk about an alpha product, those are products that trade upstairs, very robust markets. And I know that's not a retail market, but those are products where the demand and the appetite does exist. It's real easy to sort of look at what exchanges do and talk about how long it takes for products to work. VIX in its early days had modest interest, modest adoption. I know I've told the story on air before that the SPX, the first time the CBOE brought it out, failed, and they took it down because the big product then was the OEX. I mean, there's a timeline. There's a timeline of education. In our space, in the e-commerce brokerage space, we were ready on day one for SPXpm, but I'm willing to venture that many of the houses hadn't written to C2 yet. And probably couldn't accommodate trades in the product on day one. So give it time.
That certainly seems to be.
And a lot of the thing that a lot of the major houses like about SPXam is the fact that on a quarterly basis, your futures and option position cancels each other out. And you never get that with the SPXpm, which is a little bit of a problem for some of the big retail. I mean, it makes a lot of sense to trade on the serial months. And it makes a lot of sense to pitch to some retail people, but is that really an institutional product? And the thing, and I was actually talking to a retail trader today, and he was lamenting, why do they do that AM? Why do they do that AM? And you know what? The reason why that SPX AM was designed the way it was to mimic the settlement of the way futures settle, which is something that even the dullest major institution can manage.
That's a much longer story.
Well, I just finished the longer story. That's why I talked for a minute straight there.
The reason SPX became an AM product was post 87.
We got Alex going.
Now we got
talk.
Here we go.
Get the chalkboard out.
Did they have puts?
Back in my chair
When the story starts, do puts exist?
When I started in this business, they were puts and takes. They weren't puts and calls. But the move from SPXpm to AM was a regulatory trade-off. The trade-off was position limits. And essentially, the issue when SPX was PM was the argument that the New York specialist community took the imbalances home over the weekend. And having worked in the Chicago derivative community at that time, I can tell you that they had a much more well-funded political action community than we had here in Chicago. And the move was to try to mitigate some of the volatility and the difficulty of the specialists taking the imbalances home. We went to AM, we didn't mitigate the volatility. We had a settlement value that to this day people kind of scratch their head when it comes out. And the alignment with futures, I will sit here and put a $20 bill on the table. I will venture to say that if PM gets the traction I suspect it will get, the futures will move to PM too, if the regulators allow it.
Alex, I've already said I want you to come on the network and host a show called Option Stories.
Yeah,
with,
remember
with
when.
Alex. By the way, speaking of volume, SPXpm put up 2,000 contracts, the 2020 actually, on an average daily volume of 1,500. So, of course, there is a multiplier difference there.
Yeah, that's
a 250 multiplier versus 100 for a typical option. So there is a multiply that by 2.5 to get a little more ballpark figure.
No, you multiply by 10, right?
I'm sorry, no, no, you're thinking of SPY
10 to the
versus,
spider.
10 to the spider.
So that's like 20,000 spider contracts.
Yeah, I'm talking about full SPX contracts. But but still, it's not exactly a
not bringing down the house, for sure.
I'd buy a leap on that volume.
All right.
Yeah. All right. Well, there we go. Maybe we'll have that standing.
I wouldn't
$20
sell it
bet
to you,
from
my
Alex.
friend. I would not.
All right. I think with that, we're going to wrap up the old trading block, and we're going to roll right into the odd block.
The odd block.
I hate that intro.
We save it just for you. All right, and welcome to the Odd Block. This is, of course, the portion of the show where we run down the interesting and or the unusual options activity that's been lighting up the old tape today. And, of course, since we've been down here in the bowels of the Hilton for most of the day, we're going to pull up some activity that we actually saw from yesterday that was kind of interesting. And you can find all of this activity, as usual, on the old optionsinsider.com. And we're going to kick things off with good old Marvell, ticker symbol MRVL. They closed today at 15.31, down about 36 cents. This is the name that does about 28,000 contracts a day. They did well north of 30,000 today. And what we saw yesterday actually was a lot of short-term, really short-term bulls coming in to gobble up quite a few weekly calls. We saw yesterday in the morning a multi-exchange sweep coming in, picking up about 5,000 of the OC16 weekly calls. These went up right around.
I guess there's a really good Punisher comic book coming out on Thursday.
There we go.
That should be pretty great.
It's the comic book company. That might be interesting if that's your bailiwick.
Yeah, no,
but that in Hasbro.
I'm aware that's not what
that in
company this
Hasbro,
is, by the
of
way.
course. But yeah, these guys were lifting offers on these OC weekly calls, OC16s. And, of course, there's pretty much very little open interest, 1,700 contracts, so it's all opening. Of course, if you look at today, this is pretty much a pretty sizable loser. These calls went out today around 8 cents, so these guys are already feeling the pain. We also saw someone coming in maybe piggybacking on those and taking some long premium to the downside. We saw someone picking up 1,000 of the OC16 puts on that same strike, the weeklies, for 73 cents.
Maybe it was a short-term hedge. You know,
could have been. I mean, he saw this thing going against him, and he went the other way. But
yeah.
That wouldn't be my first choice. But
no. But then again, it's a customer.
Yeah, that's true. Few of these trades are. But yeah, Marvell's had a bit of an interesting range. I'm not sure if any of you guys have been watching this one recently, but it's pretty much vacillated between 11 and 22 over the past year, and it's gapped up about 8% over the past week, with a lot of the analysts coming in to start buy ratings or reiterate buy ratings on this name, and the stock's been gapping up. We see a lot of price targets floating in the $17 to $18 range. We don't need to reiterate our discussions of analysts on this show, but nevertheless, the analysts seem to be firing up this activity, and someone at least thinks by the end of the week Marvell is going to gapping up higher. Uncle Mike, this one fall into your portfolio realm at all?
No, not Marvell, but definitely have some thoughts on the next one.
The next one. I threw this next one in there just for you.
If you had said Carvel, I'd be all over it.
When are earnings for Marvell, by the way? Earnings are coming up when?
When are the earnings for Marvell? I don't know. I could pull that up.
Yeah, because that could be a factor.
That wouldn't shock me.
By the way, the only chatter I've heard is talk about consolidation in the industry.
Oh, yeah? MRVL.
with
with
DC buying Marvel. No, Marvel Comics would buy DC. We all know that.
Yeah,
everyone knows that. Superman's the only thing DC's got nowadays.
No earnings scheduled.
Well,
yet,
no, Batman. We all like Batman.
Gotta love Batman.
Previous earnings.
Batman's kind of cool. Who do you think would win in a fight between Batman and Wolverine?
All right, before we
go
down that rabbit hole, I think we'll jump into Uncle Mike's other favorite one, which is of course XLF. I know you're a little scared to play in the BACs and the cities out there, but XLF, indeed one of your favorites. Of course, the Financial Select Spider closed today pretty much unched, closed at $12.43. I think it moved a penny. And we saw the opposite side of the coin coming into XLF, a lot of bears coming in, short-term bears ahead of earnings kicking up towards the end of the week. And we saw, even though XLF has rallied about 9% over the past week, these short-term bears are coming in ahead of JP Morgan earnings and a few other companies, picking up the looked like we saw OC12 puts. These are weekly OC12 puts. About 10,000 went up yesterday for about 22 cents a piece on not much open interest, except for the week before, where of course we saw a continuation of this strategy from last week, where we saw about 8,000 of these going up for about 32 cents. So overall, close to 18,000 of these OC12 puts lighting up the tape, weekly 12 puts here ahead of JP Morgan and others. So Uncle Mike, was that you? I know it's a little small size for you, but was that you?
Well, that was for my kid's college account.
There we go.
No, just kidding. My thoughts on XLF over the long term. I'm a believer in America. I've gone my America rants in the past.
We're not going on the America route again, are we?
But my point is that if America is going to come back, the banks are going to come back too. Now, we can hate bankers all we want, and those slimeball bankers charging us ATM fees, and doing what they do with interest rates and everything. But with that, if we're going to come back, the stock market, the economy in general, America, banks are going to be coming back too. And we do have a pretty significant position for a lot of our clients in XLF. Like anything, I've always said we're long-term bullish, short-term cautious. The way we're positioning ourselves to weather the possible pullback of a 9.2% rally, we're short the 13 calls right now. And if XLF continues to climb, then what we're going to do, and it's a covered call, so we're long the underlying, but if it does continue to climb, there's plenty of ways we can roll up and out. There's plenty of ways with which we can adjust to it, but definitely a fan of the...
Overall vol, like the VIX, if you could almost take VIX and overlay it on XLF, because it's kind of like as the financials go, so goes the market right now, and actually just about all the time. If you were looking to buy puts, now would be the time to be doing it, because
it's on a rally.
IV level,
no doubt
we
about
popped.
it.
IV levels are low. Even if you like the financials, you'd be silly not to go in and scoop up some puts here with XLF volatility at kind of the lowest levels we've seen in the last 2 months.
Well, because we were able to take advantage.
Go
Sorry,
ahead.
Alex. We were able to take
go ahead.
advantage of the higher vol a couple weeks ago when we got into the 13 covered calls. So.
Boom.
Right now would be a time for us. We haven't done it yet, but last I looked, it was at 11 cents, so not quite ready to buy our way out of the covered calls yet, but nonetheless,
Yeah.
I can see it.
Great play.
I'd like to survey the desk for a moment. Volcker rule came out this week. FDIC passed it. OCC passed it. SEC will be some controversy here, but the Volcker rule is going to have dramatic impact on J.P. Morgan, B of A, especially. I mean, the Merrill prop desk, the J.P. Morgan prop desk, Goldman. We've already seen the stock just get hammered. There's a lot of other noise there, but I know I keep bringing this up. But Volcker rule, how's it going to impact those companies? I mean.
Now, the Volcker rule was the rule where none of the banks and stuff are allowed to serve alcohol anymore.
That was the
Volstead
Act.
Isn't that the Volcker rule?
That was the Volstead
No more
Act.
booze at any of the banks?
The Volcker rule.
That might help, actually.
Volcker rule essentially is the elimination of, assuming SEC passes on it, which again there's a lot of politics.
How
there,
long?
12 months out. 12 months out. But you've already seen some of the operations have wound down a little bit, are beginning to, I don't want to say atrophy their desks, but there's certainly, if somebody leaves a desk, you don't see as much hiring, even in a market with good volatility. What do you guys think the Volcker rule is going to do to the earnings of JPM and B of A?
I haven't finished reading all 215 pages with 381 footnotes
The sound
yet.
of it is negative, but
Totally negative.
But they're pretty good. These guys have been pretty good about finding their way around things. So I'll be interested to see. I'm not going to count out the banks yet because they're really good at finding their ways around things.
Right.
Let's just put it that way.
It's like Jurassic Park.
But
the life finds a way. The capital finds a way.
Yeah, clever traders will find a way. Arbitrageurs will find a way. Technology will find a way. But you're going to have the bank balance sheets out of prop trading.
Yeah. Well, what can they do? Will it be like a holding company thing, kind of?
Well, they did add because the first assumption from this is that all this money is going to flow overseas, because that's just essentially where you can do this stuff without any of these restrictions. But they did add a component to it where if any party of the transaction is a U.S. resident,
US bank,
then
right.
these apply again.
Yeah.
So they're trying to take away those loopholes wherever possible. Obviously, there's still a lot of ways around that, but that's at least seems to be one bit of understanding that they know if they do this capital is just going to migrate elsewhere. But I can't see long term how this is a bullish move for any of those names that you just
so I think that's clearly one drag here, is because in the last couple of days you had the leak of the Volcker rule, and now you're going to get some analysts who are going to look at this and say it's going to knock 10 cents off earnings, it's going to knock 15 cents off earnings. I mean, do we think the SEC will as I say, FDIC and OCC. OCC, by the way, not the Options Clearing Corporation, but Office of the Controller of the Currency. They've both given their yes vote on it now.
Now, who's appointed head of the SEC? Who appoints the head of the SEC?
The White House.
Yeah, I have a feeling they're gonna vote for it. That's my theory.
They have a comment period until the 13th of January. I think so we'll be waiting for a lot of that kind of stuff to flow in. And then, of course, just for our listeners who aren't aware, this is, of course, the rule that essentially bans prop trading in a lot of banks, and they can't invest in hedge funds and private equity firms. And it also enforces a relatively onerous record-keeping requirement on a lot of these firms. They have to actually track their trades. They have to be tagged so the regulators can see what they're doing on a regular basis. There's a lot of
You mean like the same stuff they used to make market makers do for the last 15 years?
They tried to make them do it, with some degree of success. But
well, the press won't be able to vilify Goldman Sachs anymore after this because
they'll vilify. That's what they do.
Just go across the street to all of our protesters.
Yeah,
you
just
there'll be a lot of vilification.
Trade. Yeah. You tell them the 1%'s gone.
Yeah. All right. Well, that is going to do it for the old odd block. And since we're doing this live today, I think we're going to slide right past the express block as well and dive right into a quick listener question block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
We're going to kick things off with a question from our forum. A good old user goes by the handle Captain Options. Love that handle. Might go as that for Halloween. I haven't decided what the costume looks like yet, but we're working on it. And he asks about, this will be for the boys over at OX, the impact of weekly options on brokerage firms. The ongoing narrative of weekly options says that they are a boon to the options business and to options brokers because they are prompting many customers to trade 4 times a month versus only once a month. I'm curious if the boys at Options Express can confirm this trend with what they've seen internally. I'd imagine this isn't the case for premium buyers, but I think that premium sellers have certainly increased their trading due to weeklies. Is it 2x, 3x, 4x, perhaps some other factor like 1.5, something like that? Any insight you could provide into this would be appreciated. So Jim and Alex, I'll let you run with that one.
I'll go first. 2 things. One, it's interesting when I do the workshops with our customers. The way I look at it, these weeklies have been around. It's always been the last week of expiration. They're heavily marketed now. They're very, very popular. I see a lot of customers sell premium.
That seems to be the exclusive domain of premium sellers.
Pretty much. And market makers would love, it's a great way to reduce their risk. Every week they can reduce their risk. They'll pay up for it. But it's very popular for customers to sell this premium. Yes, there's more business for sure. But customers love this idea of selling premium with just 5 days to go, or a week or 2. It's very, very popular, and I think it's still gaining momentum.
Yeah, I did a little research on this before I came over, and what we've had, the experience at OX has been essentially, yes, it's more business, but it isn't a lot broader in terms of who the customers are. It's a customer becoming more active.
Yeah.
It hasn't necessarily brought in a slew of new customers. It has been incremental business, but
it's like my bladder as I've gotten older.
Okay. You need a hobby. You really need a hobby.
I have to lay off the bear there, sir.
Yeah.
For many reasons.
But the
Sorry.
Back to the well-informed customer who understands erosion, as Jimmy pointed out, a lot of this has come from the sell side. And with the exception of the last month, it's been a good, year for premium sellers. So
the last month might have left a little bit of a dent, particularly if you're selling premium in the Widowmaker in Netflix. There,
been a difficult month.
That one may have taken the house away on.
Yeah, but to Jimmy's point, you've always had the simulated weekly with the expiration month. Back to things like the SPXpm. It's going to be interesting to see how these things play out in the simulated weekly. You can be the most quantitative person in the industry and sort of getting a handle around volatility in expiration week is very, very difficult.
Yes.
I mean, it's very, very difficult.
Let alone modeling decay and gamma and everything else.
I do think there's some differences between a weekly and a regular expiration, though, in how they actually act.
Okay.
That's kind of my personal opinion. Now, I think the Merc has it a little bad. I have some major criticisms about how the SIBO and the OIC design
the Merc
product
that full
relative
suite.
to the Merc.
Yeah.
In that the CME lists options that expire every week, 30 days prior to expiration, whereas the SIBO and the ISC, they list them 1 week to expiration. Yeah. And so you actually experience a very different decay model when trading the two, because with the Merc you're trading basically 20 days, a normal month cycle, whereas with these weekly options 2 days of the 8 days they exist, there's no trading.
It's like taking the field without warming up. There's been times that I've wanted to get into a 2-week option, but it just wasn't available to me. So I wish that we would get that on the security side of it as well.
I've made a similar comment there with I think the way the CME lists them is a much more nuanced way to approach them. And what we've seen, interestingly enough, is the use cases for those futures options they tend to go more along the lines of what the weeklies were created for, which is short-term speculating and hedging around particular events like earnings or ag reports or what have you. Whereas what we've seen on the equity side, partially due to the way they're listed and partially due to, I think, different usage cases and customer bases as well, is that just overwhelming explosion of premium selling. And yep, exactly. Thursday morning you hit that bid and you run all the way through till the following week, pretty much.
And that's one major issue. The other major issue with the weeklies is the open interest. Jim, talk about how open interest can affect a stock's price, just real briefly.
Yeah, the shorter it is, the tighter it is. It makes it so much more volatile. We love open interest. I mean, it's easy to get in and out. As soon as that open interest decays or reduces, you have more risk. So it's. I love the idea for these weeklies.
Me too.
Well, we have one more.
I'm a seller of premium.
Yeah.
It's a God-given right to be able to trade in this country, and the opportunity to have short-dated products that are very responsive. The two biggest booms in the option market in the last couple of years have been dollar strikes and weeklies. And at the same time, there are people who will tell you two of the worst things that happened in the option market in the last couple of years were dollar strikes and weeklies.
But I like to chat with those people.
For the informed investor, it's a neat alternative.
Oh no, I love the weekly concept. I think I would just adjust the calculation. Here's a question, and Mark and I have talked about it, and then Alex, give us the 2-minute answer.
I don't know.
I don't know.
I don't know if that exists.
Yeah.
As weeklies get bigger and bigger and start to really get into SPX, is the SIBO going to have to adjust how they calculate VIX? And if so, what type of adjustments would they possibly have to do?
It's a question for the SIBO. It's. I was there when the original VIX was created.
That's why I was bringing you as a resource, because you're like the original. One of the guys.
Not their spokesman, and that's an area.
Well, I'm just asking from a mathematician's thought process. Do you think that this is something that is going to weigh in on the volatility of the VIX? I think the VIX is going to slow down in movement.
So I'm going to answer your question with a question, which is, where will the real underlying be in the SPX or the SPY? And I'm not sure how that will play out. Right now, I would make the argument that the real underlying, the real liquidity is in the SPY. And it's longer than a 2-minute answer, but I think that's what you'll have to see play out. I think if things like the PM get as robust as I expect they will, you'll have better price discovery because it's an electronic platform, it's visible, it's transparent. Pit trading still has some challenges in terms of visibility and transparency. I mean, 20 years ago when I was at the SIBO, you walked out and marketed the SPX, and people would say, look, the market is 24, 26. And you'd say, yeah, but everybody knows the market isn't 24, 26. The market is really, 24.90, 25, 10. And customers would look at you and say, then why isn't the screen 24.90?
Right, they still say that.
25.10.
They still say that.
So I think the answer to your question, I hate to sort of be difficult, but the answer to your question will be where the liquidity ends up residing.
You're watching too much politics on TV,
No,
Alex.
that's actually a really interesting thought.
Listen, when I went to work, when I left the SIBO, went to work for the ISC, they toilet papered my house. I mean, I need to be fairly cautious here. People know where I live.
Uh-oh. But yeah, I think we could go on. One of the reasons I wanted to have this panel here at the show, because we can indeed go on for quite a while, but we're coming up on the end of it here. We have a few more minutes left, and so I think we're going to close out the old listener mail block, and we're going to dive right into an abbreviated Around the Block segment.
Around the Block.
See, I don't hate that
Is that your
transition
favorite,
that much.
Sebastian?
No. That one's okay. I like the trading block the best if I had to pick.
You need a hobby. You need a hobby.
My hobby is this.
How old are
you know?
How old
That's
are your
true.
kids?
That is his
I got a
his
2-year-old.
hobby.
Yeah, wait till
I
you
got
have
a 2-year-old.
Wait till you have teenagers.
Oh, wait till I show you this. You're gonna love this.
Oh no! Before we get into whatever that is, let's get into the around the block. We have 4 minutes to finish this up. Of course, around the block is the portion of the show where we discuss what's coming up on our internal horizons. And of course, this coming week we kicked it off with Alcoa. One last rundown here on Alcoa. It's hovering around 980, down about 50 cents or so from the close of 10:30. So they've caught a little bit of a bid here now, but it still seems to be hovering around 980. So not exactly bullish news coming out of Alcoa to kick off earnings season. Of course, we have Uncle Mike's favorite, Apple, coming up next week on the 18th. 18th is, in fact, the big day. We've got Bank of America, Citi on the 17th, Intel also on the 18th, Goldman, Alex's favorite here, on the 18th. So a lot of big earnings coming out actually next week. And then the rest of this week, we have some numbers rolling out. Jobless claims on the 13th. Retail sales on the 14th, and good old Michigan sentiment. I know, Mr. Sebastian, you're quite sold on Michigan.
I'm pro-Michigan State, anti-Michigan.
There we go. Michigan sentiment on the 14th. So a lot to watch on our trading screens. Really quickly, we'll start with you, Uncle Mike. What are you watching really quick going into 3 minutes and going into the weekend here, the rest of the week?
Well, no. Just earnings coming up. Definitely watching Apple. Just the markets in general. I think seeing if oil can continue to run like it has. I would expect at some point we'd have a pullback, but just the usuals.
And Jimmy, same for you, sir.
I think we're still going to creep up a little bit, but long term, or let's say the beginning of next year, it's going to be a little downward there.
There you go. And Mr. Sebastian.
Watch that. If barbecue over here is right, watch that 1225, 1235 level. That's where there's a lot of people stuck long still from this initial sell-off. That is the major resistance point here. And keep an eye on that VIX. We're either going to go right back up to 40 or we're going to blow down fast.
South of 25 handle, you think?
South of the Mendoza line.
Back in the mid to low teens.
Yes.
All will be right with the world again.
Mm-hmm.
And Mr.
All
Jacobson,
is well.
Finish it off for us, sir.
Apple, Amazon, and Slovakia.
Oh, Slovakia. Yes.
Yeah. Will they vote?
Who would have thought that Slovakia would be such the monkey in the wrench, or the wrench in the works
Well,
today?
if we open down big tomorrow, it'll be because of Slovakia, and we're going to have to go home and look at our kids and go, show me where on the map that is.
Is that Slovakia makes the high pad?
All right, well, that is going to do it for this episode of the Option Block. I want to thank everyone here for joining me on the show today. It was fun to do it live here from FIA, and we didn't have too many adult beverages thrown at us from the Taste of Expo here, so I think we did a
little
decent
disappointed.
job. A little decent. Some tomatoes may be coming our way
How dare
later.
they?
We still have Volviews coming up, so maybe we can try our hand with that one. But I want to thank everyone on the panel, and really quick, I think we have about a minute. If anyone wants to jump in with any plugs for what's coming up, that I know, Jimmy, you have some stuff from Options Express coming up you want to talk about.
We'll be at the World Money Show next week. Couple topics would be it's October 20th to the 22nd at the Hilton here, Chicago. Picking the right strike price, executing buys and sells and spreads. We'll do a session on Greeks. And then the last one, meet former traders Joe Cusick and myself. We'll have an open discussion on the platform itself, and we'll be going through trading strategies. So that's all next week from the 20th to the 22nd. We'll be at the Traders Expo in November, and we'll be in Portland the beginning of November for a workshop.
Portland, that mecca of finance.
Mm-hmm.
Well, that's going to do it for this episode. I want to thank everyone out there for downloading and streaming and subscribing to this show and making it such a success, as well as all the folks who stream by here from the live show here at the Expo. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
Regardless of how active you are as a trader or an investor, a firm understanding of the inner workings of market volatility is crucial. You are invited to join pro options trader Mark Sebastian and pro futures trader Jeff Quinto for this one-of-a-kind live event on October 21st at the Chicago Mercantile Exchange headquarters. After Jeff discusses how volatility can play into the hand of a futures trader and Mark covers how to use volatility to trade options on futures, together they'll present unique combination strategies using futures and options in tandem. This interactive event will benefit every level of investor, from the novice futures investor to the most active futures and options day trader. Don't miss this rare chance to see two industry experts in one spot. Please go to pricegroup.com to reserve your tickets today. The cost of this all-day event is $895 before October 1st, with $500 off for Price Group customers and new accounts. Again, please go to pricegroup.com to reserve your tickets today.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.